CVS Health 2025 forecast boosted by insurance pharmacy growth. In a remarkable turnaround story that's catching Wall Street's attention, CVS Health has just raised its 2025 forecast yet again. But here's why this news is bigger than it seems. The healthcare powerhouse is showing impressive momentum under its new leadership, completely reversing course from a challenging 2024. On Thursday, the company revealed strong second-quarter results that exceeded analysts' expectations, driven by two key factors that many observers overlooked: surging prescription volumes and a surprisingly robust performance in their insurance division. But here's where it gets interesting. CVS Health is now projecting adjusted 2025 earnings between $6.30 and $6.40 per share, a bold forecast that's significantly higher than Wall Street's consensus of $6.12. This raises an intriguing question. What does CVS see that market analysts don't? The company's success story spans across its three main business pillars. Based in Woonsocket, Rhode Island, CVS Health isn't just your neighborhood pharmacy. It's a healthcare giant that operates one of America's largest drugstore chains, manages prescription benefits for major organizations, and provides health insurance to nearly 27 million people through Aetna. Here's where the plot thickens. While all three segments saw impressive revenue growth of 10% or more, the Pharmacy Benefit Management Division, their largest business, experienced a 17% drop in it. Like other insurers who reported disappointing Q2 earnings, CVS faced pressure from higher-than-expected care usage, a development that's sparking debate about the future of healthcare costs and pricing strategies. The numbers tell a compelling story. CVS reported adjusted earnings of $1.81 per share on revenue of $98.9 billion, handily beating analyst expectations of $1.46 per share on $94.51 billion. While net income declined 42% to $1.02 billion due to $833 million in litigation charges. The company's underlying performance remains robust. The market's response has been overwhelmingly positive. CVS shares jumped nearly 5% to $65.32 on Thursday, adding to an impressive 39% year-to-date gain that's significantly outpacing the S&P 500's 8% growth. This remarkable recovery follows a challenging period that saw multiple forecast cuts in 2024 under former CEO Karen Lynch. Under new CEO David Joyner and his refreshed executive team, the company appears to have found its footing. But here's the controversial question many are asking. Is this sustainable growth? Or is CVS potentially over-promising in its ambitious forecasts? What's your take on CVS Health's aggressive expansion strategy in today's evolving healthcare landscape? CVS Health surges on earnings beat and revised outlook. A shot in the arm for CVS. Earnings beat and outlook boost sends shares soaring. In a stunning turn of events, CVS Health has just reported a second-quarter earnings beat and a raised outlook, sending its shares soaring over 1% on Thursday. This impressive performance is a testament to the company's efforts to revamp its retail pharmacy business and improve its insurance unit. But here's where it gets interesting. The company's success is not without its challenges. And we'll dive into the details to see what's driving this momentum. A tribute to hard work and effort. In an interview, CVS CEO David Joyner attributed the quarterly beat and guidance height to the multi-year recovery effort underway at Aetna, the company's insurer. This effort has been focused on tackling higher medical costs in privately run Medicare plans, a challenge that has plagued the entire insurance industry. Joyner also highlighted the company's retail pharmacy business, which is performing really well thanks to the introduction of new technology that improves pharmacy operations and drives efficiency. A prescription for success. CVS's retail pharmacy business has been a bright spot for the company, with sales up over 12% from the same period last year. This growth has been driven by higher volume at the pharmacy and the front of store. Although pharmacy reimbursement pressure has been a challenge, the company's investments in labor and its new prescription drug pricing model have also paid off, benefiting payers and setting the pharmacy apart from the competition. But not without its challenges. While CVS's retail pharmacy business and insurance unit have shown strength, the company's health services segment has seen a decline. This segment includes Caremark, one of the nation's largest pharmacy benefit managers, which negotiates drug discounts with manufacturers on behalf of insurance plans and creates lists of medications that are covered by insurance. A broader turnaround plan. As part of a broader turnaround plan, CVS is pursuing $2 billion in cost cuts over the next several years. Joyner told CNBC that the company still has to close a few more locations to reach this target. But it's also focusing on being in the right geography. CVS is still buying stores in the Pacific Northwest, where it doesn't have